Good morning, guys. Today is 27 July. Since my last update, the market hasn't changed that much, although the world changed a lot. Last week, we got the US-China consular tension, and then we also got the European stimulus package pushed through the European Parliament. The market trying to push through the 6150 resistance but failed, and currently we're still sitting at around 6,000. As I told you last time, I was using the cover call position to benefit in this sideways market. I sold the July 30 6,000 call at around 110 or 120. I closed this morning to took a bigger profit. I think I make like around 500 profit after the commission, because that still got 3 days to go. So I decided to roll over to the next expiration, which is August 6th. That got 10 days to expiration. I'm still trying to target the 6,000 option because that's the close to expiration. I don't expect the market to meaningfully move upside or downside. I think we probably still gonna be in this tight trading range. Until the trend is break, we're gonna continue to use the same strategy to benefit ourselves. The other thing we could do is targeting the further out of money call option at around 6,200, because the market couldn't try to break the 62,000. I might decided to increase my risk to the upside a little bit. Selling the call option to collect more premium because the market couldn't break the resistance. But I think I'm gonna have to think this over, because I think in the next few days the American government gonna announce a new stimulus package. That could be the positive for the market. Although I do think like the market is already pricing that factor last week, but well, it depends. I don't want to lose money. The other thing I definitely gonna do is selling the further out of money put option. I'm targeting the August 20 that got 24 days to go. This means I put the order around 4100 XJOZQ7. So that means the market has to drop about 33% for me to lose money. I think this is probably not going to happen, I would say. Unless we get some very big nasty surprise, which I don't think so. So what if this one doesn't fail? I'm actually push out a little bit. Again, with the further out of money put option, you gotta be very careful about your size, and then you careful about what you choose to do, because the margin requirement. And you can guess the margin requirement using the ASX margin estimator. You can just type that, Google it. And the other thing I want to talk about is the Afterpay, because this is such a popular stock to talk about. The Afterpay is currently sitting at around $70. The $70. Let's put out a graph to see what its trading looks like. Yeah, so the market failed to break 75 point. A lot of people trying to think about whether or not this is a good buy, whether or not you can buy the stock at this moment, because they fear the missing out the gain. But at the same time, they feel like if they buy at this current level, what would happen if the market drop? I think there's one strategy that can help the situation is selling, targeting the 55 put. If you're currently selling the 55 put, $55 put, that gives you about, the midpoint is about, I would say the midpoint is about like $1 or $1.15, depending on situation. 55 dropping from current level will be representing about 20% drop from here. So if the Afterpay stock drop about 20%, a lot of people would definitely buy it, I would say. So if you're selling one put option at APT 4 and 9, 55 strike, that gives you about, selling one put option, that gives you about $100 before commission, because with the equity option, one option contract equals 100 share. So you just factor times 100. That's the premium you're gonna get from selling the put option. Well, $100 is about roughly about 55,000. Yeah, that's 55,000. So usually if you want to buy a little bit bigger, you can sell like a 10 put option contract that give you about $1,000 premium if the market, if the Afterpay doesn't drop to 55. So with this is the, let me see, let's see when expire. So this is about also expire on August 20. So that got 24 days to go. So in other words, if in 24 days the Afterpay continue to go up or stay flat, you get to pay $1,000. And if they drop to 55, if it drop to 55 below, well, you get to buy it. So I think it's a win-win for investor, for long-term investor, I think. But if you're a speculator, if you're a speculator, I would say the thing is a little bit different, because Afterpay is such a high volatile stock. The implied volatility on the Afterpay is extremely high. You can see with the this is the ASX margin calculator I put up. It's about 85. So this is very highly volatile stock. So if you're selling the naked put option, I would be very, very careful about what you're doing, because 20% seems a lot, but for Afterpay, for the stock like Afterpay, well, it's not that. Well, it's very possible for them to drop like 20% in the next few weeks or so. So well, it depends on the situation, right? If you're an investor, I would definitely recommend you selling the 55 put to generate bit income, and also for the in the period of waiting, because I think that's a good strategy to do so. Rather than just wait and see, right? You get nothing. You get nothing for wait and see. And then if you're selling a put, at least you get $1,000 out of it. If the stock doesn't drop, you still get to make a profit. I think that's pretty much what I want to cover today. I think it's gonna be a very uneventful trading way today. We are currently getting, we are currently sitting at 60.35. That is last Friday. So let's see how it goes. I will see you probably on Wednesday. Okay.